Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Wednesday, June 28th edition of Benzinga's PreMarket Prep. I'm Spencer Israel, as always, joined by Joel Elconin and Dennis Dick. On the show today, we are going to talk about the strength in the banks on the heels of today's second round of the stress test coming out at the close. So the banking sector was strong yesterday. Going to talk about a couple earnings. We had General Mills, we had KB Homes, we had Monsanto reporting yesterday after the bell and this morning. We're going to talk about that move in CBI and Blue Apron. Their IPO got priced at $16 per share. We're going to talk about all that, and of course we'll take your questions from the chat. Our guest today at 8:35 will be joining us. New guest. His name is Joe McDonald. He is the creator of the Oil Hedge MLP Index. Ticker is AMLX. Joel, how are we doing in the S&Ps this morning?
We are trading at the highs of the pre-market session, up 350 at 24.24. On the downside, pre-market low is 1375, and now that took out the 9-day and Tuesday's low, so that's still going to be relevant. Looking for 1650 on the downside. Continued upside, we had all those lows at 24.28 to the 30 level. That will be your resistance if the rally can continue. Moving on to the crude oil market, down 13 cents here at 43.13, 44.24. That's the high. A little bit of a wild ride in that one. Got hit off the number down to 43.67, but came back. Gold in the green by 680 at 1253.70, and silver trying to get back over $17 at 1687, up 28 cents. Triple D, how you doing on hump day?
Just looking at a little market rally here again. Buy the dip, Joel? Buy the dip working?
Well, it didn't work yesterday, right? You took out that big support.
Because if you bought it at the end of the day, you're up. Right.
Okay. I guess it's an open-ended term here. Big breakdown yesterday, Dennis, and you could talk about news or whatever, fundamentals. I think the potential thing to really sink this market is the gridlock in Washington. They tried to get this healthcare bill. You had the IBB run up some of these healthcare stocks. And now Republicans and Democrats really can't agree on it. So if you're looking for a catalyst of the downside, it's going to say no major policies out of Washington in 17, no tax cut, no Dodd-Frank, revisions, no health care revisions. And I think that could be the catalyst for a little downturn in the market.
Well, I'll give you another catalyst, and not that I'm getting bearish here because I'm starting to probably stick in the bullish camp, but okay. Look at some charts of the Momos here because we obviously had some major breakdowns there yesterday, but NVIDIA here has just quietly sold off for 3 straight days. 159 on June 23rd, 146.58 it got down to yesterday. It's bouncing a buck here this morning with the overall market, but I think there's a few people on a stock like that might be caught. Just thinking, they were buying, when the stock started coming back, and I'd be like, whoa, are we going back to test those lows from a couple of weeks ago? Possibly. AMD, ugly day yesterday. It's bouncing back here this morning. That's its brother-in-law. But look at even the charts like Microsoft. Microsoft starting to look a little bit ugly there. Apple, how was a reversal day there too? Just when you started thinking, this 145 starting to hold, maybe it's going to get back up, and start trying to retrace that big down move that I had when I had the whoosh day back on June the 9th. It's going the other. It's actually looking for some follow through now. And a lot of times what you see from a technical perspective, we're just talking technicals on these right now, not talking fundamentals, is when you see a big down move, you'll have a period, maybe even a couple of weeks of digestion, and then actually a continuation of the original move. So on a chart like Apple, if you're thinking that, we had a 7, 8, 9 point down move on that one day back on June the 9th. Now we had a pause, and just for the last couple of weeks here. But if we could take out those lows at 142.20, maybe the stock could see 135 again. I'm just making an argument right now. No opinion. I'm just throwing out the bearish thesis here. going with your bearish thesis.
Okay, well, let's not get all bearish.
I don't want to get all bearish because every time I get all bearish, this has been the hardest market to be bearish in for the last 7 years. I'll tell you, in my 18-year trading career, I have primarily made my money on the short side. I primarily, I did very well during the tech bubble. As a trader, you've got to be able to go both ways. They were saying yesterday, at the House committee meeting there on equity market structure, somebody was bringing up, maybe shorting, is kind of un-American. I'll tell you, shorting is necessary. It keeps prices in check. It's good for price discovery. I mean, you need to have shorts out there. So if you're thinking shorts should be banned or shorting shouldn't be allowed, look no farther than the financial crisis when they banned shorting for the financials during that 3-week period. That was the first time I've ever seen something like that. But they were like, we got to stop the shorts. And they banned shorting on all the financials for a 3-week period. During that period, the overall market declined 18%. The financials were down 23%. So it's not the shorts' fault, guys. The market goes down, it's not the shorts' fault. But anyway, so it's not un-American to short stocks. And when I'm saying it is it's actually easier on the trade side because stocks go down a lot faster.
Oh, yeah. Yep. What a bull eats in a year, a bear scarfs in a day, but that term hasn't been used very much as of late. Just one final note before we move on to our movers and shakers this morning. Terrible relative performance on Apple on that rebound, right? After it got hurt, we're looking at the daily chart here, got hit to 142. The market rebounded, actually made a new all-time high yesterday. Apple didn't even get over 148. That's over $8 from the all-time high and the 156 handle. So if you were looking at the market leader as the S&Ps went up to that new all-time high, which I haven't been looking at the Apple chart that much, it would have given you perhaps a little clue to this sell-off. But that's history now. So we have to deal with the sell-off. We got to find support and resistance and see what's going to move the market this morning.
Let's even look at a chart like Amazon. It got up there, got murdered, then the Whole Foods purchase. It got up there, but it could never get above the highs really that it made. It got up 1016, it kissed 1017, but lots of highs over 1,000. Now it's back down below 1,000 here again. Starting to become a psychological barrier, that 1,000, even though it got up there and closed over it a few days. It's kind of going the other way. You know what? This bounce today, I'm just saying, we're up this morning. We're up 4 points here in Amazon. We're up in Apple. We're up in a lot of these, or we were up in Apple. We're up in NVIDIA. We're up in a lot of these stocks here. NVIDIA's up over 2 points here now. But all I'm saying, Joel, is I think there's going to be some sellers in this bounce today.
Okay, well, we'll find out early. And just staying on the Amazon theme, we were having a great discussion with Spencer on the pre-market show regarding, their foray into Whole Foods. And I can't remember who, someone's daughter-in-law in the chat has some stock or works there. And of course, we can give our opinions, but what you do or what your daughter-in-law is totally up to you here. But I mean, is this a slam dunk? Is there going to be any kind of regulatory hurdles for this to clear?
What stock are you talking about? I lost what stock.
Amazon Whole Foods he's referring to.
Oh, you're talking about the Amazon Whole Foods stuff. Joel gets going and then, okay, so Amazon.
Where's Dennis?
This was my argument. This morning. So you were setting me up. You were throwing me the softball up the middle, and then I lost track of where you were.
You stepped out of the batter's box.
I did. I stepped out. I wanted a better pitch. You didn't give me a good enough pitch up the middle. Anyway, so all I was arguing was you can see Whole Foods has come down significantly here. Nothing to do with Amazon stock, more from the Whole Foods perspective. But people are speculating that there's another bid out there. Stock got up to 43.5. It is starting to leak here now. Now we closed at 42.38 or 42, I've got 42.56 on one system, 42.38, so I don't know why that's differing. But anyways, 42.38, let's say we closed at. Well, they're obviously saying, okay, well, I don't think there's another suitor out there. All I'm throwing out there, if I was Walmart, I wouldn't approach this, and say, oh, okay, well, we got to buy Whole Foods to stop Amazon. If I was Kroger, I wouldn't say we got to go buy Whole Foods to stop Amazon. Maybe approach it and say, hey, Amazon's stepping into this too. They're starting to get too big here. Maybe they shouldn't be allowed to come in here. And I'm just saying this is, not going to happen. But I'm saying, what's stopping somebody from speculating that maybe there's some antitrust issues here? And if there is, if for whatever reason, they look and Amazon is getting too big here and too powerful and they want to slow them down a little bit, If there was any article or anybody that came out, like a major analyst came out and said, "Hey, there's some antitrust issues potential here," stock could fall under $42. Joel?
Yeah, if I could jump in for a second, I guess I would agree with that. What you were saying this morning was that Walmart came out and said that they weren't going to jump in here, and Kroger didn't say that. But I think I was talking with JJ Kinahan last week at TD Ameritrade about this very thing, about the fact that Whole Foods is trading higher than the takeout price for a full week, and he basically agreed with you, Dennis. He just said, yeah, I don't see anything here. I don't see any way for anyone else to step in here. He did not bring up the possibility of antitrust, which I think is interesting. But
I don't think, and personally, just to go on the record, I feel there's no antitrust issues here. I'm just saying, if I was Walmart, and obviously Walmart knows some people too, and in the right places, and some of these big companies execs know some people in the right places, I'd be throwing that argument out there. And maybe all it takes is a couple of analysts to come out and say, hey, Walmart might try to or somebody else might try to battle this on an antitrust basis. Whole Foods could fall a couple bucks if that really started to come out that hey, maybe they're going to try to block this deal somehow.
And what does it take for Walmart or Kroger's to throw a couple $100,000 at a team of lawyers?
Or a couple million.
Yeah, or a couple million. Yeah,
yep. Find a reason to slow them down. Or Costco. Costco may be getting hurt the most here. So I'm just saying, when you're buying this thing at $42.38, I think there actually is risk. I was saying before when I came out, a week ago, saying, well, there's a potential suit out there. There's probably no risk. It's probably 42 is the low side. There is still the potential that if it didn't go through, you could end up being below $42. So if you think 49 cents is your only downside here this morning, you're buying at $42.49. I think you might be mistaken. In all likelihood, there's a 95% possibility it's going off the board. I think at $42. But things happen, and nothing goes straight off the board, and there could be some people fighting this thing yet. So that's my argument here. Is you never know, it could end up falling below 42 here yet.
In one Trump tweet. That's all it takes. There's one Trump tweet on this, and boom.
Amazon's getting too powerful. We need
to
keep
boom. One tweet.
Boom.
One tweet.
The thing will be down to $40.
You know what? That wouldn't shock me either, because we know he hates the Washington Post, and Bezos owns the Washington Post. So that wouldn't wouldn't shock me if he were to come out and say.
We're the only people coming up with this conspiracy theory.
Okay, time to move on.
I like it. Okay, so earnings plays. There's a couple here this morning. General Mills, GIS. I own this in my investment portfolio. One of the few food stocks that I do own in my investment portfolio. I like the 3.45% dividend here. And the stock's trading slightly higher on earnings.
Yes, earnings. Q4 adjusted EPS of 73 cents. That beat by 2 cents. 71 cents was the estimate. Sales of $3.81 billion versus $3.75 billion. So a good Q4 there for General Mills, and they do see fiscal year adjusted EPS of $3.10 to $3.13, which is lower than the estimate.
GIS hanging out at the lows ahead of this.
Yeah.
We saw a couple food stocks earlier getting hit, last quarter on their reports. This one I don't believe did, but personally I think it's cheap down here at $55. It's completely out of favor though. So you're talking, this is in my, not as a trade, and this is in my investment portfolio. And like I said before when we were talking with Anne-Marie, I am a momentum trader and a contrarian investor. I like to buy and stick on my investment portfolio for 10 years when everybody hates them. Everybody's not liking the food stocks right now. I think there's some support. I think there's a little bit of value here. There was, last year rumors that they could get taken out. I don't think that's going to happen, but I don't mind getting paid 3.45% to wait. Long term. Short term, trend is not your friend here, and the thing could go lower.
Hanging out at the lows of the move, keeping an eye on 55, 51 to 57 basis, your daily chart. So just hanging up above that, trading a few pennies into the green. So keeping an eye on that level, not only today, but over for the next week or so. Going to the monthly, man, this chart looks ugly. Remember those food stocks? Kellogg went to 100. Tyson Foods went to 100. All those stocks had those ridiculous moves. Now they're back down at reality. not quite. I need to see a green monthly candle here off one of these lows, 55.5, before I get too excited. Long term, as long as Amazon doesn't go into branding and coming up with their own foods, which I think is the worry with this stock. But 55.5, that's the level of the day, of the week, of the month in GIS.
Monsanto is due to report at 8:30. We have not seen the MON numbers here yet, I don't believe, anyways.
No, they're 8.
Did we get them?
Yeah, they're at 8 a.m.
Okay, what were the Monsanto numbers?
Almost on the dot. Monsanto reported Q3 adjusted EPS of $1.93 versus $1.76. Nice beat on that. Sales of $4.23 billion versus $4.17. So a good Q3 there. They also reaffirmed their EPS outlook for the fiscal year, and that's in line with the estimate.
One thing, if you can learn on this show is that when a stock is getting taken over, their own company fundamentals don't matter nearly as much. That being said, it's not a done deal yet with Bayer, and it could get blocked, so the company fundamentals matter a little bit. But if the deal goes through, it was like on $128 or whatever, that's it. So, that's the one thing to consider. Like when you get, these deals, obviously, like a Panera Bread, for instance, if that reports, well, we already know it's getting taken over at $3.15, so their earnings matter nothing. And when it reported like a month and a half ago, stock didn't even move on the earnings report because it doesn't matter. It's already getting taken over. So Monsanto earnings are always going to be muted a little bit. It will move more with, rumors about, is there, potential, not going to go through the deal, or is the deal going to go through? But 118's been the price here. Somebody's been stepping through. Joel, just from a technical perspective, there's been massive resistance here the entire month of June at 118.
Yeah, and that's a good $9 below the supposed takeout price of 127. So I still use that level. It looks like we never did get that many shots to buy it back in the lower 90s. That's kind of that area that we focused on when there was a rumor of the deal. You get this spike. You kind of like to see it come back to the level from which it emanated from. But man, it's weird. Maybe we could do some digging on the desk today and see, give Bayer a call or something, because this was rumored. What was it, Spencer? Was it the middle of last year when you initially got the pop? Yeah, this was.
But you knew this was going to be a long time because this has
good point.
All over it.
It's
just
been
like
a year.
The Dow DuPont. Dow DuPont has been forever, man. Did we get a number at 815? We're really bouncing.
815. Yeah, let me see.
Number or something?
No.
Well,
not that I'm seeing.
We got something that came. Somebody said something somewhere.
Yeah, ECB said the market is misjudging Draghi's speech on stimulus. To see what Draghi said yesterday, they're just kind of they're going back on what he said. He was thinking, maybe we'll have to cut back on the stimulus because it looks inflationary. Well, now they're saying, Draghi, he was just joking. He's misjudging how strong the economy is. So that's what they're saying. ECB said to see market is misjudging Draghi's speech on stimulus. So the old Draghi rally here we got going. The S&Ps are up 8.25 here, challenging those times, 24.29. So the dragster saves the market this time.
The dragster saves the market. So TLT just on that really got a pop. We were trading down the TLT down around 126. And just here, boom, 126.27, we're up 50 cents in the TLT too. Overall market's getting a pop here too. Financials actually leaked a little bit on this. Financials are way up because the TLT was weaker, and they're actually they're kind of hanging at the same place. So there's definitely some movement here this morning. So pretty wild action.
Yeah, good catch, Dennis. Good eye there. That was a great eye. Buy the dippers. Live it again here.
Okay, jumping back over to earnings. Actually, we're going to get KB Homes. Actually, no, we had KB Homes last night. I just want Spencer to give us the numbers for KB Homes. We'll break down the technicals.
Yep, KBH was last night. Q2 EPS 33 cents versus a 26-cent estimate. Sales of $1.008 billion. I don't have the estimate on hand. Home building sales, $1 billion versus a $927 million estimate. So a good home building sales and a Q2 EPS number. Deliveries for the quarter up 11%. Average selling price up 11% as well. So it looks like all around they had a good quarter.
And stock has been bouncing around after hours. It's actually trading flat here right now, but Joel will tell you about the action after hours.
All right, let's take a look. You got an initial spike, as these home builders like to do. Got a spike up to 23.91 and after hours trading. Now we pulled back into yesterday's range, only trading up 11 cents. So on a day like this, after a stock makes a multi-year high, closing high right there, 22.82. You had another closing high at 22.78 the previous day. So stays green. It's okay with me. Yesterday's high could be a nice factor too, a nice level to look at, 23.16. So holding tight. You want to see this hold this gain, stay green, and go into greener pastures. This is the highest level for KB Home since it traded up to 25.14. This was way back in May of 2013.
Jumping over to our ratings land here. A couple interesting ones. I want to go to Expedia first. They're getting upgraded here at Citigroup this morning. EXPE hasn't traded really much this morning, only traded 2 shares. Is bid up at 149.26 this morning, another bid at 149.05. So it does look like it might tack on a couple bucks here this morning. It's been beat up the last couple days. It was 156 2 days ago. Now it's getting an upgrade. I think it's going to run an overhead resistance, though, because there's some people who bought this the last few days who are underwater. So I don't know. This is an upgrade I might actually fade, but I'd like to fade it higher, like in the 150s.
Yeah, just a 2-day haircut for Expedia. You know what I'll look at, from 54.70 down to 46.5. That was your 8-point move. Add 4 to that, so 150.5. Another $2 here, Dennis. You could get a shot at it today, but you got 2 days of people scratching their head from that sell-off. So, man, I tell you, if I was wanting to upgrade this stock as an analyst and I saw 2 daily candles like that, I think I would hold off, man. I think there's some overhead supply. That's another favorite term we like to use on the show.
And also CY catching an upgrade at Barclays. That stock is trading up 3.5% in the pre-market. It's a big pop for CY here right now. 13.65, close at 13.20. What are you thinking on the charts on this one?
Old Cypress Semiconductor here, trading up 47 cents. This is a pretty thick stock, and so you need a lot to move it in the regular session. Well, with that being said, you have a pre-market high, as I mentioned, at 13.87. Look at your dailies, folks, and go back to the 2 daily highs, one at 13.80 on the 20th. And then another one at 13.80 on the 14th, 13 cents away, along with the pre-market high. If it clips through that, let's see. We can see the 14 handle, but see if the sellers are still there. 13.80 to 14 looks like resistance to me.
Dollar Tree getting a pop. DLTR upgraded this morning at Loop to a buy. Stock is taking out the $70 resistance level here. These dollar stores, they have never really come back. I mean, if you look, they had remember that disappointing earnings report. We got to go back into, and I'm going to the whoosh in August of 2016. So almost a year ago, Dollar General went down to 90 to 70 in a matter of like 3 or 4 days. DLTR did not fare much better. It went to 95 and then leaked for the next month or two down to 75. They've never really come back. Everybody was saying these were the stocks that, were Amazon resistant. These were the stocks that, people, looked at, and when all the other traditional retailers were getting hit. Well, these things have been hit now too. Do you think there's a opportunity here? Are you going with Loop Capital on DLTR, or do you think it's a retailer and I don't want to own any retail?
I really don't understand these dollar stores. Spend very little time in them, so I'll just look at it strictly from a technical basis. You need to clear 71 even, and the reason you need to clear that is that's the highest level that this stock has been at since it took that hit from 74 down into the mid 67 handle. There you got a gap to fill up to 72.34. So just a lot of overhead supply in this one, but if you can clear 71, you might get some shorts scrambling for cover.
Jumping back over to the ratings, Qualcomm getting downgraded at Northland here this morning. QCOM trading down about 30 cents in the pre-market. We're at 55.14, so not down much. I mean, overall market's helping to lift everything here too. Qualcomm's been a sleepy little giant. I mean, this is a 4.13% dividend. Ooh. It's really gone nowhere. It hasn't participated at all really in the recent tech rally. It's kind of the forgotten child. I don't know. Like, I look at it, but they've got their own issues, I guess, too. The competition with Apple or the problems with Apple and that. I don't know. Qualcomm, 55.13 this morning. What are your thoughts?
Taking out the low from yesterday at 55.41. I do going back on the dailies, going back a little bit farther. I see there was a stand made at 55 even area, 55.08, 010, 02. So I don't know. We're just lumping there and not getting away from it. So 55 doesn't hold. I could easily see the double bottom getting tested from early May at 54.40 to 54.41.
AABA, what's the ratings change on this one? This is your Alibaba tracking stock here now, so it really doesn't matter. But there was an analyst move here in AABA. What was it?
It was JP Morgan announcing an overweight rating.
Why even rate this thing? Because it's just tracking Alibaba. I mean, go and look at the charts. Stick them on top of each other. And now that's basically all it is. So you can look at Alibaba, you can look at the intraday chart, you look at AABA, and you can put the charts right on top of each other, and they're virtually identical. Just to show you how much they're identical, Alibaba's trading up 1% this morning. AABA is up 0.95% this morning. It is an Alibaba tracking stock now. It doesn't have the Yahoo stuff in it. That is what this is. I don't even know why they want these stocks out there, these tracking stocks, but whatever. I don't mind, actually, as an arbitrager. I don't mind because it gives me something else to trade. So AABA, just following Baba.
Yeah, and I'll just leave the comments at that. I mean, the chart reflects the gap up that it had, the pullback. If you're looking for some resistance and you're not paying a lot of attention to the Alibaba, yesterday's high right there is 60 cents above here, 54.73, and then above that into the 55 handle. But just not a good looking chart here. Follow the Alibaba. That will be your leader. We got to cover a really hot stock yesterday, something I had on my radar for a while. It finally took off. Spencer, can you give us the news on Chicago Bridge and Iron? And I want to know who in the chat, or was it someone on your Twitter yesterday, Dennis, that brought it up to you?
I think it was somebody in the chat. Who was it in the chat yesterday that brought up CBI? Because great call. I mean, this thing was trading flat. They must have, been following the story here closely. Obviously, they had some news yesterday that came out and really popped it. What was the news?
Well, the news yesterday was that they got a favorable ruling from the Delaware Supreme Court, who ruled in favor of CBI in their dispute with Westinghouse Electric. And then this morning, CBI announced that they won a tech contract to build a complex in Uzbekistan.
Stock, huge pop on that. I mean, that was a huge pop. It's getting some follow through, so you know how I love my 2-day move. You're seeing it this morning.
Yeah,
my 2-day move says, when you get to 10 o'clock the next day, after about a half an hour, all the Johnny-come-latelys getting in. That's sometimes when you have a reversal. So I would look at this thing where it's trading at around 9:45, 10 a.m. If it's tacking on another couple bucks, I'd be ringing the register.
I saw this thing moving yesterday, and I mentioned it to Chubbs, and it was around 18 and a quarter, 18 and a half. And I'm like, man, there was a wide spread in the stock. And I looked at the options and I'm like, man, I just felt like lifting a 20 call. I was thinking about you with the 2-day move, man. You could have driven a truck through the spread on that and those options. There was nothing there. Really good news, Dennis. I'll go with you. I'm looking at the 2-day move. Keep an eye on the pre-market high. 21.23 right now. That's where we're trading. And also a couple daily highs at 21 and a quarter. So look for the follow through. See where that print is. That the pre-market high right before the open, or another trick that we like to talk about on this show. Let the open ferret out. Maybe they open this thing 21. They jam it to 21.50. Everyone's looking for, a real extended rally. And then you come back down through that opening print, potential short with your stop at the high of the day if you're so inclined to use that kind of risk-reward ratio. But a couple different setups. Huge move in CBI.
We've got another minute here before imbalances. If there's any symbols in the chat, let us know that as well, and we can get them out there. A couple others that I had on my list, just Dow DuPont. This is a merger that's obviously been on the table for a long time. We just briefly mentioned it, but I believe there's a headline. Spencer, you got this headline. I think Canada gave the nod yesterday too, and we were kind of waiting on Canada. It does indeed, there's a lot of doubt that Dow DuPont was going to get approved, but Europe gave their approvals. I believe the U.S. has approved it. I think Canada, we were waiting on. I think last night Canada gave the nod here as well. I think this Dow DuPont deal is going to go through.
Well, I mean, that's the headline right there. That the Canada Competition Bureau said they're going to allow it.
Yeah. So this looks like it's going to be a done deal. So Dow DuPont looks like, I don't know if we have a timeline on when actually this deal is actually going to close, but it does look like, you look at the charts on these two, there's a ratio that they've been trading off for quite some time here. So DOWDD, I used to trade a little bit. It's almost 1-to-1. It's like 1.1-to-1 or something. So the ratios, you have to look it up because I don't have it in front of me there, but they trade very closely with one another.
I think it was as long as DuPont agreed to sell off some businesses, their global herbicides and R&D units. But as long as they can do that, Canada's cool.
All right, Dennis, we're seeing some buying balances up there. S&P's up 6.5 at 24.22. We got the pop off the interpretation of the Draghi speech. 24.29 holds as the high. Crude just hanging in there, trying to stay in the $44 handle. Dennis,
we're mixed. Bank of America, 122,000 to buy. I am seeing the strength in the financials here this morning. Although, like I said, they cooled a little bit there. They were really hot when TLT was way down. They like it when the TLT is down. TLT has come back quite a bit from the lows, although TLT is still trading the red. And that's, I think, why some of the banks have cooled off a little bit. Bank of America, 122,000 to buy, though. That's trading on 15 cents. Citigroup's up. Morgan Stanley's up. Although they have both small sell imbalances still on them. I'm seeing quite a few sell imbalances. GE, 67,000 to sell. It's early here, though. They're so small that those can just get offset. CL, I'm seeing a 25,000 share sell imbalance depending on what the TLT does. That's a better indicator than the SPY for CL. Pfizer, 37,000 to sell. Baba, 11,000 to buy. This is usually a buy and balance. Seems like an Alibaba every day. Twitter, 23,000 to buy. Kroger, 27,000 to buy. They're all small. So maybe we'll take another peek at 855, see if they've grown at all. I do see Procter & Gamble is 33,000 to buy. That one's interesting because TLT is trading down.
Someone who was in the chat, Frankie, brought up the cyber stocks because yesterday we had another cyber attack. This one hitting a bunch of Russian companies. I saw Merck top. I don't have the list in front of me, but it was all over the news yesterday. So let's talk about some cyber stocks.
Want to jump into the cybersecurity stocks like a FireEye or a Palo Alto? Is that what you're talking there, Spencer?
That is what I'm talking.
PANW. These stocks have come back from the low. So PANW was hated there at the beginning of the year. Actually, if you just go out to the weeklies here, you can see what I'm talking about. It wasn't the beginning of the year. It was the beginning of the spring there in March when it really got hit hard from 150 down to 120. Leaked down. Everybody's thinking maybe it's going to go single digits. No, wrong. It's come back a long ways from those lows. But now you kind of sit here in the middle of nowhere in PANW. 135. I mean, you're kind of halfway. But you're in the middle of that whole gap down area, Joel, that we had in March. I don't know. I'll throw this one to you because technically this one looks like interesting.
Yeah, I mean, I'm always wary of these gaps. And if these things aren't going to move off headlines like that, then, what the heck's going to move them, right? If they're not going to get a big rally. I could give you a number on the upside here in PANW because you got a triple top just under 139, and we're trading quite a ways away from that. So sellers will be stepping down off that level. If you're trying to hold and lock in profits and you're not a scaredy cat about gaps getting filled like me, 128.48. Since you had the gap up, that's been your lowest level. Maybe have a protective stop there because you could get into a no trade zone all the way down to the high before the day of earnings. And what was the high? In order to fill the gap in this thing, you got a gap between 119.50 and 133. Those kind of formations just scare me a little bit. Let's look at HACK here, HACK. Yeah, that's the ETF. Oh, boy. I mean, you had the rebound and I don't know, 30.72 is a high of the move. If you're trading HACK, I keep an eye on the $30 level, but man, oh man, if you project, and we don't do much projections from on charts like this, but you had that move from 31.20 down to 29.60, $1.60. You just hit 30.80. I mean, that could take you down into the 29, even 29.20 area. So those charts are not looking too good there. And should we do, someone else has mentioned a couple stocks in the chat, SJR, but let's do those after the break. And we got a new guest coming on. Thanks to Adam Sarhan of Sarhan Capital. Thanks, Adam's always great for finding us guests. And he's bringing on Joe McDonald. He's the creator of the Oil Hedge MLP Index, and we'll talk about MLPs and oil with Joe. We'll be right back. Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elkanah, along with Dennis Dick and Spencer Israel behind the glass. We have Joe McDonald on the line. He's the co-founder and partner at ETP Ventures and the creator of the Oil Hedge MLP Index, AMLX. Joe, how you doing on this Wednesday morning?
Fantastic. Thank you.
Thanks for coming on. We really appreciate it. So let's just start out. What is an MLP?
Master limited partnerships. There are several different types of master limited partnerships, but the most popular MLP structure is typically an energy-oriented company that hold energy assets very similar to a REIT structure. And they've become wildly popular, particularly as we'll discuss today, in the diversified structures, which people typically access through either an ETF or an ETN, exchange traded notes, or a mutual fund or even a closed-end fund, so that they can access multiple MLPs all in one basket of securities. And again, I'm specifically speaking to energy. There are different types. There are real estate-oriented entities, but for the purposes of what I'll discuss today, we'll specifically be discussing energy-oriented, crude oil-related pipelines and nat gas companies.
How are these just different, like structured than, like, so you got an MLP. Why structure it as an MLP? Like, how is that different just than a normal oil company?
So these are tax pass-through instruments. Okay. In other words, there's not an underlying corporation where you have a whole company structure.
Okay.
A significant portion of all earnings from the assets are paid through, and the tax treatment is different from a C Corp situation for the underlying companies themselves. So it's a more efficient package, if you will, for the owners of those assets to package them as MLPs.
Looking at MLPs, of course, you got to look at the correlation to oil. And, let's look at what's happened so far in 2017. Not great for the oil market. And give us your outlook for the second half.
Sure. And it's worth noting for the MLP followers up there on your line that know that the revenues that are derived from MLPs aren't necessarily tied to the price of oil. So typically they're investing in MLPs for the earnings potential, but they know that fundamentally the operations of those pipelines aren't necessarily tied or have anything to do with at least the short-term price of oil. They're certainly driven by demand, which in itself can be a function of price, but the price should not impact these securities. So when we talk about the outlook, what we're really discussing is the outside forces of these MLP prices, right? And the fact that these are heavily traded instruments because they're incredibly popular, and the traders of these instruments are clearly move their price in accordance to what oil is doing. And that's an unfortunate sort of additional attribute that the investors are capturing when really they want the underlying fundamental growth and yield. So talking about the rest of the year, I think it's going to be a reflection of really what we've seen at the beginning of this year so far. Oil prices are ultimately down. We either stabilize from here. As you all know, there's quite popular discussions around the 40 mark, just because there's likely technical support there. And that essentially would be another 20% decline from here, potentially, or 10% decline from 44. So that in itself can continue to weigh on master limited partnerships, particularly, again, in the energy space, oil-related MLPs. So that could, in itself, wipe out a dividend generation from these MLPs. If someone is an investor in an MLP that's paying 10%, well, perhaps that dividend yield is going to get wiped out by principal, which is exactly why we want to introduce the potential to hedge your MLPs against commodity prices.
All right. We have some questions coming out of the chat here, and some good ones at that. The first one's from Spice. MLPs create a lot more tax accounting work. Any ideas how to get over this issue?
Well, at the end of the day, these are pass-through instruments, which means that they typically generate a K1. There are energy infrastructure securities if you're an individual investor that's not purchasing these securities through some type of a fund. that you can purchase directly as an individual investor. Of course, we always promote the diversification aspect in using some type of an open-end or 40 Act product, be it an ETF or a mutual fund, just because diversification is key. But in that ETF or mutual fund, there are some that will not issue a K1 per se, but a 1099 miscellaneous dividend. So the best thing to do is to find a fund that does not pay a K1, but instead pays a 1099, so that it'll look just like any other of your mutual fund or ETF investments.
Jumping back over still to just MLPs in general, can you give us a few examples of these, like some ticker symbols that are out there, or companies that maybe the major ones?
Sure. Well, I think I'd like to stick to the investment products. So I'll give you an example. Of course, surely the listeners are familiar with AMLP, and that is the Alerian MLP product, and that has 25 of the top energy infrastructure MLPs in it. It's about a $10 billion fund. So when an investor purchases that fund, they're purchasing 25 securities. And in fact, the index that we've developed is very, very similar in nature. The index is 20 securities, but there is a significant overlap. There's only really 2 or 3 securities that aren't in that Alerian index. And the objective is to give similar exposure to that index, which on our index right now is yielding about 7.5%, which is very strong. But that index, again, has tremendous crude oil risk. It is also cap weighted. There's 3 names or so in the Alerian index that really drive 25% of the returns overall, just because they are expressed through that weighting equivalently. So what the Oil Hedge MLP Index will do is provide similar exposure to those top 20 MLPs in the energy space, specifically crude oil related securities that are very high dividend yielding, while reducing their crude oil risk. So the key products that folks should really pay attention to, as far as I'm concerned, for diversification purposes, are always going to be on the ETF side.
All right, one more question. Just looking on the risk side, Stock Hunter is, worried about, can the MLPs just all of a sudden be dissolved? In other words, you wake up one morning and the units drop off a cliff.
So these are assets, and these assets can really only be restructured if the company decides to make special changes to perhaps take it out of a C Corp and restructure it in to a C Corp. But as long as there are assets and those assets are of value, you can't imagine how an asset can lose value overnight per se. Of course, there's always the risk of mismanagement for the underlying master limited partnerships. And this of course is why diversification is incredibly important. You should never hold just a few. You should hold a product that has a basket, like in our case is 20. So the underlying asset will always drive the ultimate price. But of course, if it's an obsolete asset, then value erosion will happen over time, like a lot of the coal-oriented assets did over time, lost value day over day over a number of years.
We've been on the line with Joe McDonald. He is the creator of the Oil Hedge MLP Index, AMLX. Take a look at that. Joe, thanks for coming on and explaining the historical crude oil risk in MLPs as well as your outlook. Great fundamental information for us, and we hope to speak to you again soon.
Fantastic. Thanks for having me on. I do appreciate it.
Thanks, Joe.
All right, 846 here. Dennis, I for some reason, I just don't see a lot of MLPs in your portfolio.
You know what? There's something, and I am annoyed by the same thing. Every time you make a trade in these things, they generate the tax little form there, and you get the K1 thing. It's like, I bought and sold the thing. It's like it's all zeros on these things. Like, I'll show you how much you put in, how much you took in, on the bottom line, zero. And they got all these forms, they got to hand them all to the accountant. So I'm annoyed by the things more than anything, too, just like they were saying in the chat. I wish I didn't get all these forms, but I do trade them from time to time, the different MLPs, but they are, correlated with oil. So, it's another thing, that it's more of a, I trade these things more from an arbitrage perspective, where oil is down, I might be shorting them. If oil's up, I might be buying them. So I'm not a big investor in MLPs, although it sounds like there's some pretty good tax advantages with them. Obviously, I'm in Canada, so it's a little bit different story for me.
All right, we kind of ignored DC1 here, and DC1 had two charts that wanted to take a look at, and maybe some of the fundamentals, if we know them at all. Let's start with SJR, and off the top of my head, I couldn't tell you what that one is. Shaw Communications, really nice looking chart here coming up, trading up 42 cents in the pre-market. Not sure if we have any news.
We had earnings this morning.
Earnings?
That's what it was.
Yep.
Yeah, 21 cents. 21 cents versus 25 cents. Sales of 996 versus 997 million dollars. So they missed on both.
Big 10 shares trade at 23.39, so not a lot of action here yet.
23.43 is your highest.
That was last night. 23.39 was last night. There hasn't even been a share trade this morning.
Okay, I'm giving you your March 2015 high at 23.43. So take a look at that. If you've been waiting to get out since March of 2015, that's a level. Above that on your monthly levels, 24.34. And we covered SJR. How about CRH? Do we have any news or earnings on that one? That's trading up as well.
No, I didn't see any news, no.
That's an ADR. So
ADR, Dennis hates ADRs.
Actively trading. It's got an active market, 36.14 to 36.18. So obviously trading over C's right now, and that's why it's active here. It's up 1.43%. I do not follow this company. I have no idea about this company.
Major resistance at the multiple highs at the 36.60 area. So I'll keep an eye on that if I'm trading it. And then we got some big earnings still here late in the season. And we got Micron here, Dennis. And this stock, we talked a lot about it with Sean. Had a great run, up 39 cents in the pre-market.
When do they report? When's Micron report?
I believe it's tomorrow.
Yeah, MU's been just a monster. I mean, we talked about this one a couple days ago there. I put it on perspective. I forget who we were talking with, but the one,
Sean.
Oh, it was Sean. It was Sean. But, you got, so I try to put everything in perspective. And, we try to give you a little longer term outlook. We try to give you some medium outlook. And sometimes I talk about the ultra short term stuff that I do. But when I look at this from a swing trading perspective or even an investing standpoint, stock was $5 in 2012, ran to 35, came back down to 10 in 2016. Now it's up 200% in the last year, 31.66. Now it's $32. So can it continue up to that 35 area? Sure it can, but it's going to eventually run into some overhead resistance. You start analyzing it from risk return. Wow, we've had a hell of a run here. I feel like you're late to the party. And, everybody gave me heat for saying this last week when, I was saying, I forget on which stock, but, in some cases, it's just better to just sit on your hands. If you want to chase things, that's fine. I'm saying, and people are saying, oh, they make money chasing stocks. Great. If you make money chasing stocks, do it. I'll tell you, my 18-year career, I've never made money chasing stocks. So I'm not going to chase Micron here because it's just not my style. So if you're a stock chaser and you've done very well chasing price, and when stocks go up $2, you think they're going up another $2, by all means continue to do that. But you know what, we have a lot of beginners on the show too, and people who are still developing their styles. So I'm just telling you what's worked for me. And chasing stocks has never worked. And I look at Micron with the move it's had in the last 2 years, and I feel like if you're coming in here and investing in it now, I feel like you're late to the party. If you're trading it, it's a different story. But you're coming in here as a long-term investment on Micron. I think it was good, at $10 a year and a half ago.
Right.
Now it's 31. It's kind of lofty.
Yeah, hindsight capital. I'm just keeping an eye on the highs of the move. As I said, 32.96, buffeted by a whole number at 33. Also a pair of lows to keep an eye at the 31.60 level. Could easily fall to 31 after that. And Nike reports late, and man, they didn't quite get it to 50 on that run like they did back in the middle of 2016. Filling a gap. I mean, this thing usually moves pretty good on earnings. We are opening up into resistance, though. You had the recent high off that low. I'm not sure why we got hit so bad, down to 50.79. Oh, that was the Amazon Whole Foods day. They hit it down to 50.79. Got back up 2 days ago to 53.57. So I'll look at that as resistance. I wouldn't get super excited if it got there. 54.05 was your high on June 15th.
Quick and balanced look here. They've grown a little bit. We do see a few standouts here now. I said already Bank of America, still 116,000 buy. Geez, selling bounce has grown. 124,000 to sell here in GE. So it's actually trading up here right now. So obviously one of two things is going to happen. That buy balance is going to flip, or that sell balance is going to flip, or the stock's going to start to come in. Kroger, 41,000 to buy. Sprint, 42,000 to buy. Ford, 51,000 to buy. U.S. Steel X, it's trading up substantially. 78,000 to buy in U.S. Steel. This one's still interesting to me. We've talked about it. It's getting up. The only problem is it seems to be starting to form some formidable resistance in the 22s, but still above 20, I like it. As long as it stays above 20.
Yeah, I mean, you drop down off that horrible earnings. The highest level you've had since that earnings debacle was 24.37. But in the interim, you've made multiple highs under that level, the 22.70 level. So, you could get out of the woods clearing 22, maybe some room up to the last three highs between 22.52 and 22.61. But way this thing trades, man, if you want to sell it there, have your order out there because this thing is quick. Could be right back down at 22 if, in fact, it does get up to that level. Spencer's mentioning here SLB and Schlumberger here making a new low on the move yesterday. Boy, this is not sitting pretty, Dennis. Look at all those daily lows at 65.15, 65.13, trading 20 cents above it. Can't distance itself here. Boy, oh boy, maybe get a move through 65 here and continued downside. That stock was under $60 back in January of 2016 when we hit the skids in oil, when we went down to the middle 20s here. Dennis, I guess Tommy Lackey would say this is setting up both ways. If it holds 65, has a chance to rally. Right?
Yeah, if it can hold 65, I think you're right. I think it takes out 65. I think I'm very concerned here. And we're going to talk about another setup here just in a second. I just want to comment on the oil stocks. They're beat up. I mean, they're completely out of favor here now. Oil has been beat up. If you bring up any oil stock chart, they're sitting near the 52-week lows. I mean, with the price of oil getting hit as much as it has, it's not surprising. Halliburton looks the same. It went from $54 in March down to 41. Everybody who's buying back in March thinking oil's going to go to 80 is wrong. And, now that oil's come back down and, people start thinking, maybe this could fall back into the 30s, they're hitting all these stocks. So that being said, I think oil is just, in a new range. You've got to find the companies that are going to survive. The Exxons and the Chevrons are probably fine. So those are companies, maybe if you're looking at a long term, and I've had this question coming at me from a lot of different angles lately too, is like, I want to buy oil. And people will naturally say, I want to go buy the USO. The USO is the worst way to play oil because of the contango. You are constantly erodes over time. So you can't just think, if crude goes up 30% next year, the USO is going to be up 30%. It doesn't work that way. There's cost of carry involved because, oil is very expensive to store. There's obviously the futures contract is always ahead of the spot rate is. So USO is always rolling. They're buying the next month out, next month out, next month out. That contango can, change. But, as of, recently, I think it was upwards of 15 or 18%. So you're eroding that much every year just because of the cost of carry. When you buy an oil company, it's different because they're actually, pulling it out of the ground, or it depends on what they're doing it, but they're not having, to store it like the traditional vehicle. So, they can leave it in the ground. A driller can leave it in the ground, pull it out, sell it. So the cost of carry is less there. But, that's the better way to play it. If I was bullish oil, I'm not saying I'm bullish oil at all. But if I was bullish oil, I would look to an oil stock, the good ones that can survive if oil's at $35. So the Exxons and the Chevrons, the Conocos are probably fine, COP. But when you get down to like the RIG, that's a company, Transocean, that's going to be in trouble if oil doesn't come back. You can see the price of it. $14 is $8 here now. This was, going back, 2011, an $82 stock. So it's down over 90% from the highs. And actually, I believe before that, it was even in the hundreds. So, my chart's only going back 8 years. But you've got to find the companies that are going to survive if you're going to play oil.
All right. A few more stocks out of the chat. We have about 2 minutes remaining here. Let's just go real quick for DC1, looking at MT. And I think this is a play. There's been an iron ore rally going on. I think this was Pete Najarian was talking about unusual options activity in this back over the weekend. I mean, it's got a nice run going here, trading up 40.
Steel. So,
steel. Yeah. Man. I see 3 highs at 22.50. So if it gets through there, I'm looking for $23. I need a continuation. It just depends if steel gets hot here. Dennis, any comments on MT?
I mean, it's the same as X. So you can look at, obviously this is over in Europe, so it's a different environment. But when you look at the charts and you bring up X and you bring up NT, they all kind of look similar. They're all going to be up. MT's come back a little bit better than US Steel has. I still like, if I'm playing steel and I own this one of my investment portfolio, I still think Nucor is best of breed NUE. So, that's one I do own, and it's got a nice dividend too. I like the Nucor steel. I like getting paid to wait. You know how I love my dividends, 2.65% dividends. So if I'm playing steel, I'm playing Nucor.
All right, Triple BY got whacked off earnings. Made the low the day after. Red Dog reversal there. Came back. I mean, if you're short this thing and you're looking for cover, you got all the way up to 33.40 to fill the gap. Needs to stay green, though. I think you stay green. Might fall back closer to this $30 level. But I think you're going to find buyers ahead of that to kind of I missed buying in the 29 handle. Now it's in the upper 30 handle. I think there'll be buyers in the lower 30s. Dennis, I know you're going to say it's a retailer, but any comments on Triple BY?
The one thing I will say about the retailers is they're starting to form a bottom here again. And we've been talking about the dogs barking, and, retailer has been the biggest dog industry of them all. So Kohl's come significantly back from the lows, got down to the 35 handle. It's on the 38 handle now. Macy's is starting to show some life here. Actually, yesterday I had a nice candle on Macy's. Go to JWN. I always talk about that one. It hasn't done much because I think it's still waiting that there might be a go private offer there for JWN. But Triple BY, again, it's coming back a little bit here. Retailers getting some life. It is in a gap area here. But for me, it's kind of in the middle of nowhere. Now you're in that gap. Now you're 30.72. Can you say it could fill the gap? Yeah. But it could easily go back down and test the lows as well, which is way down at 29.12. So if I'm buying it here, I kind of got to give it $2.
Right.
It's a long ways to give it.
Yeah, that's at least you know where your out is on that. And then we'll just wrap it up the show here real quick. We talked about extensively the Rite Aid deal and the pop that it got yesterday. Kind of had trouble in the 4 handle on the day there was rumors out it might go through. Hit 4 yesterday. So all your bargain people that bought it under 320 looks like to be scaling out at 4. I mean, this is a coin flip. I mean, it doesn't look like the deal is going to go through as originally planned or at the lower price. So if you are shorting it, waiting to come back in, major support under 320 and resistance getting there at $4. $4 even was yesterday's high.
All matters. The headline matters.
Headline.
So technicals mean almost nothing on this. It's all about headlines on this. And I mean, they come out and they're going to approve the merger and things going to take off. Comes out with a headline that the merger is not going through. Things in trouble. I saw an analyst, I don't remember who it was, but they said fair value of Rite Aid if the deal doesn't go through is $1.50. That's what that said. I forget who that was though.
Very nice. Yeah. I can maybe help that by going into a Rite Aid once in my life. But that's it for us today. Hope you enjoyed our chat with Joe McDonald, again the creator of the Oil Hedge MLP Index. AMLX is the ETF that tracks that. On tomorrow's show, we're chatting with Chris Kimball. He's the founder and CEO of Kimball Charting Solutions, another technicals guy. So we're gonna get his charts and patterns that he's watching in the market right now. Don't forget, you can like us on Facebook, follow us on Twitter, and catch the pre-market prep on our podcast on iTunes, SoundCloud, and Stitcher. We're also on YouTube on our Benzinga TV YouTube channel. That's it for us. Have a good rest of your Wednesday. Good luck out there. We'll see you folks Thursday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.